Hello, everyone, and thanks for being here. So here we have Hussein from Hoxton, Magnus from Leftlane, and then Ichaso from Notion Capital, and we'll be talking about what has changed in the venture capital industry over the past, say, couple of years, 3 to 4 years. But before we start, can you please give a brief introduction about yourselves, like one sentence each? Ladies first, because why not?
Hi, my name is Ichaso. I am a general partner at Notion Capital, which is a venture capital firm based in London, but investing across Europe. We've been pioneering B2B software investing for the last 15 years, and some of the companies in the portfolio that you might know are like GoCarless, Currency Cloud that we sold a couple of years ago, Paddle, Tradeshift, ULive, and so on. Personally, I joined them 5 years and a half ago. Prior to that, I was running Microsoft Ventures in Europe, doing the investments for Microsoft in Europe. And,
was it fun? Doesn't sound fun.
It was a lot of fun at the time. I'm not sure if it's that much fun today because it changed a lot, the goals, but it was a lot of fun, and I think very unique time to be working for Microsoft, for sure, and for somebody like Satya, which is definitely a reference in the, even in the AI space.
Magnus?
Cool, yeah. Glad to be here. So I'm Magnus. I'm a principal at Leftlane Capital, which is a relatively young VC fund out of New York, started 4 years ago, co-invested in the first investment from that fund and then joined them over. And actually, for the first year while I was with Leftlane in London, Hussein kindly hosted me in his offices. We now have 7 people on the ground here in London, 35 in New York, investing in over $1.4 billion fund, Series A, B, C, internet technology startups across the world.
But Leftlane has negative connotations in the UK now.
Yeah, when we issue term sheets in the UK, then you know we like to
take our time, be slow. Yeah, good for you. And Hussein?
Hi, I'm Hussein. I work for a venture fund that does seed stage investing. We invest into companies and categories that you probably wouldn't be able to name or identify because they're brand new.
Nice, thanks a lot. And let me start with you, Ichaso. So I think up until 2021, 2022, VCs, especially on pre-seed and seed, were investing in their almost 40-mile radius. So pre-seed and seed was a very hyper-local business, which then changed in 2021, 2022, given the whole liquidity, but then reverted back to it being a hyper-local business. Do you think that's the case? Am I making shit up, or is that actually the case?
So it's interesting. I do think more than VCs, angels have been always investing pretty close to where they are. I do think VCs have a little bit of a bigger scope. I will anyway say that if you want to invest in the best companies, probably you need to have people on the ground or people dedicated to look at those geographies. Think that if you see 95% of the deals, the 5% that you are missing are usually the top deals, because they go off the table the fastest. So unless you are really on top of a market, you will never get to see the top 5% of the deals. And so it doesn't necessarily need to be close to you, but definitely you need to have people dedicated to look at those ecosystems, I would probably say. And it's not a matter, I think we can get comfortable with remote investing these days. It's more of dedicated resources to cover geographies and to cover themes or topics or whatever it is that you really want to see the top deals in that sense.
Yeah, and Magnus, how are you guys doing that at Leftlane? Different offices, different people covering regions, left lane, right lane, middle lane.
I think for us it's a pretty free-for-all approach, interestingly. We have a high volume approach, so you know every investment team member will end up speaking to 20, 25 companies a week, and you know that typically is in areas where they have strength or interest areas, but oftentimes it's also just across the spectrum, really. So it can be a bit of a in and out.
Nice. And there's been a lot of AI companies recently over the past year or 2 years that have actually got into 8-figure in revenues, which then gave leeway to even more funding going into AI. It seems like, especially on pre-seed and seed, there's a big rebound since the beginning of the year. Do you think that's the case for the whole industry, or is it particularly just for AI? Do you think we're back? Are we all going to make it?
I think it's 100% true what you're saying with regards to AI being the outlier here. I have personally spent a lot of time in Gen AI over the last 6 months, and it feels like we're back to where 2021 vibes were in the industry. You were back to 50, 100x revenue multiples on Series A rounds. We're back to I was actually last week in Dubai, debriefed with a founder that had just done a fundraising round, and was a situation whereby Monday first call, Thursday term sheet, then a bunch of US funds throwing more term sheets, and then someone flying in 7 people from across the world within 7 hours to go bring home the deal. Which hasn't been the case as much, I would say, in 2022 and 2023. So I would definitely say that overall the market sentiment is quite bullish at the moment within AI. And the interesting thing is that there is definitely finally real world value in the application of AI. And I believe that venture capitalists are seeing that, and they are therefore betting on it.
Yeah. Hussein, this whole 50, 100x revenue multiple valuations, 72-hour windows from first meeting to a term sheet. Do you like that?
I want higher as a seed investor. When I'm talking to Left-Lane, I'm like, why not 200x? Why not 400x?
Exactly.
These valuations are all over the place right now. I would say if you're an AI company, it's toss a coin, it could be anything. If it's not an AI company and it's a Series B type company, I think it's really quite challenged. And then weirdly enough, it's a seed stage company, it's again all over the place. And to be fair, at seed stage, it's really easy math, it's kind of infinite, right? Because there's usually no revenue whatsoever, which is usually when we end up investing. So we have, we're like infinite multiples.
Mm-hmm. And that resonates with me actually. So we had this one company that raised a $150 million round at $1 billion valuation when they only had 8 million in revenues. In 2 years, they got to more than 100 million in revenues and almost had a flat round. So although we're back, I don't think we're back on Series B and beyond or pre-IPO levels. Can you elaborate more on that?
Yeah, so that's what I said. I think seed, put it into its own bucket. AI, put it into its own bucket. And then everything else, at some point, reality catches up to you, and I think reality catches up to you pretty fast in this market. So yeah, you might have this absurdly high valuation, then all of a sudden you're at the Series B, people start doing some real math in terms of financial analysis, and then the valuation either stays as is, or actually, that one's actually pretty good. A lot of times the valuations come down.
And Ichaso, you do a lot on B2B, cloud, SaaS. What are some of the emerging trends there, apart from AI, open source dev tools, because those are 3 good buzzwords, but what else?
So we are looking a lot into, or I am specifically, in the last couple of years, I've been looking a lot into product-led growth, product-led sales. Basically, I think we've been investing in B2B software for a long time, and my colleagues are really enterprise-focused, very much. The way we were consuming software for the last 10, 15 years. But if you think about it today, business owners and business managers are 30, 35, 40-year-old individuals. And these people want to try products, they want to experience products. They are not like, my mom will never buy insurance online, right? She will call someone, she will speak to someone, she will go to an office. There is no way today someone who sets up a restaurant goes to talk to someone to buy insurance. They go online, they search, they buy. And so things that you can experience, and some of those products obviously in B2B, you cannot use them without an integration. But clearly, definitely you can give the experience and you can allow your users to at least experience what that can be and build what is called product qualified leads. So I think for me, there is a big trend towards, sorry if there is salespeople in the room, but removing sales upfront and using products, in fact, for user acquisition. And I'm very excited about that. And I think that applies to any vertical and any area. It can be AI. Obviously, developer tools has always been that way because it's a bottom-up approach. It's always letting developers use the tools even before they buy them, right?
But you should be born with it, right? I guess if you're going to do a product-led growth or a bottoms-up developer adoption strategy, from a founder character perspective, you have to have it in you. It's not something you can pivot towards.
You definitely will be surprised. You would absolutely be surprised, and I think a lot of the people in the audience who have been looking to enterprise companies, and you guys can talk about this probably too, when we could see companies in Series A coming to us which had 2, 3 POCs in place. Basically, they had no product, and they had been paid to build the product by enterprises. A bank, Barclays, comes and say, hey, we want the product, and well, they have something that looks like a product, but it is not a product. They have never used that. Gives them some money, and then with these 3 contracts, build the product. That's not the way I'm looking to invest, because I don't think that's the way people will consume in the future that product. Today, business people are looking for consumer-like experiences, and you only do that if you have a really product-led strategy and you build your company with that product-led strategy. Otherwise, there is no way you get to that.
Yeah, thanks. And Magnus, like speaking a year back when we were in the dip of the market, speaking to a lot of the folks, it seemed like because of the inflated valuations and the high rounds in 2021, there were a lot of companies who were burning a lot of cash and weren't able to put enough substance into their valuations. And then there were a lot of funds who back these companies. They all have negative IRR, negative TVPIs, and it's almost impossible for them to bounce back, at least for that fund. So for a complete reset to happen, we have to first have these startups either die or survive, and then new funds to come up in 2023, 2024, so that they wouldn't be carrying on that baggage going forward. Do you think that's the case? Are we on a complete reset now, or do we still have the remnants of the 2021 market in a bad way?
You feel from an LP perspective predominantly?
From a VC perspective, most. Because I don't care about LPs that much.
Yeah.
They should care for themselves. They have enough money to care for themselves.
Yeah. I think that it is still a work in progress from what we see in the market. There are still companies from the 2021 hype area that won't really want to speak to later stage investors, because they're still sort of figuring out a P&L that was a bit more upside down and had support internally and sort of growing into their valuations. And some of them have also pulled the brakes relatively early and still had lots of cash in the bank, and so they're just figuring out. But then also you see more and more of these companies to really come out on the other side. And I think what's interesting is, in my previous VC fund that I worked for, we did a force ranking of an old fund, and what turned out was the 5 value drivers of this fund, basically the one that people were most bullish about turned out to be a 0, and the one that people ended up being the least bullish about turned to be the fund returner. And so that was 8 years into deployment period. So I think that with venture capital and with these super talented teams, I think you should also never forget that these people, they dedicate their lives to solving a problem, and sometimes it's solved within a year, and sometimes it can be solved within 8 years. And ultimately, for you and I, it doesn't matter that much, as long as ultimately the right results is at the end of it.
Yeah, thanks a lot. And Hussein, your focus has been to focus on entrepreneurs that have a US go-to-market approach, that they're going to grow the business in the US, fundraise from the US, down the line M&A and IPO from the US, hopefully as well. How has that evolved over the past 5 years? With the whole capital that's flowing in 2021, 2022, have you seen less entrepreneurs go to the US market because now they can find capital, and now when the capital is out, maybe there are more entrepreneurs who are going for that route again?
I think 2 things have happened. The first is that the ecosystem has strengthened considerably, and I think AI is a really good example of this in the European sphere. So when you think of the centers of excellence for AI, it's obviously Silicon Valley, like everything from San Francisco to kind of San Jose. And then number 2, and arguably you can flip 2 and 3 depending on who you are. Number 2 and number 3 are London and Paris. And London specifically because of DeepMind, and that's Google's kind of heritage in AI, and Paris because Yann LeCun wanted to live in Paris, and so the entire AI engineering team at Meta is largely concentrated in Paris, and you're starting to see the offshoots of this. So for the first time, I think, kind of ever in the European market, we're not only on par with the American market, in some cases we're actually quite a bit ahead because of these teams, and there are things that you can do here that you couldn't even do in Silicon Valley. That's a new thing, and that keeps things a little bit more here. However, if you're going to try and really get rich in the industry, the world is kind of broken up into a few different regions, one of which is China. I don't think you're entering the Chinese market as a foreign company of any kind, especially geopolitically these days. You know, there's Europe, but Europe is not one big thing. Europe is France and Germany and Spain and Italy, and every single one of those requires a different go-to-market. And then there's America. So even if you're starting anywhere in Europe, I would argue your first market, your first core market outside of your friends, family, immediate network, and your home market should be America. If you win the US, you get that much bigger to actually come back and win the European market over time. And to be fair, if you lose the European market, you can come in and buy the European competitor. I think that is still a 90% accurate kind of true statement, even to this day, despite what I just said about the creation side.
So despite what's happening around AI and Europe's competitive advantage on AI, meaning in London and Paris, you don't think that more decacorns can actually emerge from Europe given a lot of different dynamics in play?
No, I didn't say that. I said a lot of value can actually be created. When you look at all the companies, and again, look at private market companies, it's a little bit deceptive because everything with a decent amount of revenue got marked up, particularly in 2020, 2021. They're 250-ish kind of private unicorns. I'd say the vast majority of them are kind of garbage. But if you look at companies that have crossed 500 million plus in revenue, it's really hard to kind of make that revenue, like to get to that kind of revenue. It's hard to fudge that one. You kind of have to be a serious company. 3/4 of those companies all have a big, predominantly US go-to-market strategy. So the data doesn't lie, and I don't think that's going to be true. You create here, you sell over there, you get really big, you come back here. The poster child for this, by the way, if you want one example, is Hugging Face. French company, based in California in terms of its headquarters and commercial go-to-market, and its entire engineering team. The company is basically a Parisian company, has been going for a number of years, and has done really well within this AI kind of boom.
But you don't think that's going to change, meaning a company like Hugging Face would continue to raise B, C, D rounds from the US and then IPO in the US market, for example, so the financing value chain would stay there completely?
I think the financing direction, there's a big gravitas towards the US, and the big change that's actually, I think, happened is a lot of the American firms have come into the European market. So do you count the American firms who are here? You guys are kind of an American firm in terms of your heritage. Do you count you guys as a European firm or an American firm? My prediction is kind of in 10 years, the European firms will be wiped out. It will be predominantly American firms, like employing Europeans, like running the firms, but it will be American firms that kind of dominate the market, at least at the high echelon.
Yeah. And Ichaso, because we touched a bit on LPs, I'll ask a couple of LP questions. With 2021, 2022, we've seen a lot of new emerging fund managers, solo GPs raise new funds, etc. I mean, there's that space on pre-seed, seed investing has become very fragmented, but then there weren't enough fund managers again. So past 2 years, we haven't seen a lot of new funds come up. Are you seeing a change in that? Do you think more new fund managers would, with the whole we're back type process and trend around AI, do you think more fund managers are going to come up over the next year or so?
So it looks like, based on some of the numbers that Sifted published recently, it looks like in 2022 there were 60 new funds created in Europe. In 2023 there were 40 of them. So yes, there were less new funds created in Europe last year than on the previous one, but still those are 40 funds. I was a little bit surprised to see that, to be honest, when I saw those numbers. But definitely there is less money coming from LPs into venture for two reasons. One is because, or three probably. One, you can put money somewhere else and you make just good interest rates, and you can make pretty without having so much risk, a lot of money. The second thing is there has been very little liquidity, and so people who put money, LPs that put money into funds, they haven't gotten money back, and so that's the second one. And the third one is that there was a big hype around venture, and so a lot of LPs over-invested into venture, and so now they are pulling back. So there are different reasons that are basically have reduced the amount of money that LPs are putting into venture. And the reality is that when those LPs come through, it's very difficult for them to invest first-time managers when they have a fund that has a track record, 3-4 funds, right? And so I was still pleasantly surprised to see there are 40 funds, and I think it is great. Obviously, not all of those will make it to second, third fund, because unless they really deliver in the promise, they will not be able to raise funds. But yeah, there are still some out there.
Thanks a lot. And before we close, last question to Magnus. Do you expect any seismic shifts in the VC industry? May it be blockchain, AI, data-driven VC, no humans, machines deciding, we're all gone extinct, no more VCs type stuff?
I do believe that venture capital is getting more and more commoditized as an industry.
Do you feel commoditized?
I would say I don't.
do.
I mean,
Look at me there. Like,
I don't feel commoditized, but I think that, you know, venture capital, you know, 5 years ago felt a lot less commoditized versus today. You know, and like, if you talk to our colleagues in private equity, I think that they feel pretty commoditized, right? Like, and they probably felt
I think
like
they
this
are
15, 20
commoditized
years
as
ago.
fuck, yeah. Right.
So I think that, you know, with more and more data tools to surface opportunities, with more and more, I think, bottom-up initiatives like Headline published them of, you know, you just ingest all your raw data in like a website and then it spits out data. I do think that, you know, the work of a venture capitalist will change over time, but I think it'll be more gradual. It'll happen over the next, you know, 10, 15 years as opposed to in a big shot.
We'll make enough money by then.
Exactly.
Thanks a lot for listening to us. We're a couple of minutes late, but then thanks for joining us.
Thank you.
Thank you.